All right, and we are recorded. So I want to get started, as I have to, by giving you several disclaimers. Just because of the content that I will be sharing, I need to do my due diligence. So neither I or TRIA or any other organization associated with this call is endorsing any political party with this presentation. It's just based on the facts as I see them, as I have done my research. Beside that, it's for entertainment purposes only. Again, this is my opinion. This is how I feel from the research that is going. It's not something that TRIA shares the same ideas. Again, do your own due diligence as our mission statement at TRIA goes. And we want to help you grow your real estate portfolio by providing you education. I believe this is education. I have done a little over 5 hours of research on this particular presentation. So I am deep into the knowledge, and I'm going to share that with you guys. I want to start it. I'm going to break down from a high level. I'm going to break it slowly down to real estate. So bear with me a little bit. So what are the impacts that the outcome of the elections have on our real estate portfolio? And I want to take it a little 30,000 feet high and come back to real estate. So throughout the various podcasts that I've listened to, throughout the various financial advisors that I've listened to, everybody tends to agree that there will be a time of inflation. Some people even call it hyperinflation. I personally think that's a little too far of a stretch. But do I think that there will be an inflation? I agree with that. And what will cause the inflation? For example, it might take a little while, like it did during Trump's first presidency, when he was president the first time. But tariffs are not a good thing for if you don't want to have an inflation. Tariffs normally can lead to an inflationary period because things that you're trying to import become more expensive. And if you cannot have the same thing that you're looking to get, then you're going to pay more for that same amount. Also, the best way to deal with the national debt is inflation. If inflation rises, the value of our country or the value of what the US government gives us as a security, the value of that goes higher. That means we can borrow more, we can spend more. And as we know from Trump's first period that he was president, he was one. Biden has now topped him, but Trump had one of the highest expenses during a president period. Biden, of course, went over that. So what is that? What does that all mean? That means during inflation or during any type of inflation, it is really good to park your money in assets, in hard assets, right? Now, the other thing that I truly believe, and I believe it so much that I have sold it all, but it was very surprising to me that Trump, when he was running this time for president, that he was saying that he wouldn't do anything with the crypto, with Bitcoin. That was a surprise to me because during his first term, he was very against Bitcoin and he had nothing for the crypto investors, right? Like he didn't believe in that. He was trying to steer away from that. Trump is more your guy for rural energy, for oil, and mining. That is more Trump's background. So what I did, and it might have been a little too early, but last week I sold crypto. It was at the high, of course. Today, crypto is already trying to top that high from last week. But I have sold all my crypto, meaning I don't believe that Trump is going to hold his promise on crypto. There's several other financial people that don't believe Trump is going to hold his promise on crypto. Because he's in office, he's not going to run again, so he's not trying to do any favors with anybody. Crypto, I sold all my crypto, and that's the do with it what you want to do. Again, this is just my opinion as far as what I believe is what is going to happen. Now, I also don't think that some of the aggressive language that Trump has had on immigrants, on the tariffs, on all of that stuff, that it is going to be implemented straight away. I do truly think last time it took him half a year to give us tax breaks. It took him a little while to implement some of his other strategy, and I truly think that it's a negotiation tactic. But I 100% agree and believe that we're going to have inflation. Trump, as far as from the real estate perspective, Trump is going to make real estate a little bit more appealing. So what is Trump looking to do? Trump wants to stimulate real estate by getting permits much easier. In one of his speeches, I believe it was in New York, but I can be wrong of the location. But in one of his speeches, he literally said, "I want affordable housing next to your house," meaning he wants to make sure that it becomes easier to build. He wants to have higher density, so he wants to have more houses in the same location, and he wants to have more affordable housing. On the affordable housing side, that can be very attractive for us. He is looking to give people that do affordable housing or allow for affordable housing or are building affordable housing, he's looking to give a lot of tax credits for affordable housing. So might be something you look into. Then on the other end, again, he's going to make building and getting permits for your flip and for your build, he's going to make that much easier. So he really wants to stimulate people to build and to create more properties and to stimulate people like that. He's also going to stimulate the American people by giving them less income. So they're going to be paying less income taxes, and they're going to compare that or going to offset that with the tariffs that they're going to charge on the goods that are coming into our country from from overseas. So to wrap it up, again, I believe there's going to be inflation. Trump is going to want to do more housing. He's going to do that through making building easier, more affordable housing. So he wants to know, or he wants to see more affordable housing. What you can see is that the density in, for example, cities like Raleigh and Durham, you can see that there will be zoning updates, that you can build more houses, you can do an ADU or even more. And Trump is going to give us income tax breaks, which really stimulates the entire economy. With the entire economy being stimulated, people have more money, and I'm saying more money like this because there is going to be a tax break. So people think they have more money, and they're going to be spending more money. So what I've been doing since August is I have been all in on real estate. Like I spent my savings, I spent everything. I'm going into building. I truly think that we're going to have inflation, and therefore I want to have my dollars into hard assets. I want to have my dollars into real estate, because if you have inflation, that means that your dollar is worth less if you keep it in the bank, or if you keep it under your couch, or if you keep it in the bed. The dollar becomes worth less. So what is the best thing to do to prepare yourself for inflation is to buy hard assets. And now that asset, because the dollar becomes worth less, that asset becomes worth more. Again, all of this was for entertainment purposes only, for us to have a discussion. This is my opinion. Again, I don't endorse any political party. This is do your own research on what I just studied. I've done over 5 hours of study since last Wednesday on this. Shoot me questions. Alexis already shoot me a question. Thank you, Alexis, for that. So drop emails or drop your messages in the chat. Let me know what questions you have based on what I just told you, or any other questions you have based on your portfolio. But again, to summarize for people that step in a little bit later, I am a strong believer that we are going to have an inflation starting beginning of next year. As far as interest rates, I didn't touch on that one yet. as far as interest rates, it is really, really difficult to drive interest rates down when you have an inflation. Now, Trump was also the president with the lowest interest rates during his last, when he was last president. A little bit, the side note there, what we have to look at is it was also COVID, right? Like he was our president during COVID. So it was easier to get the rates lower because we were in a crisis. I personally, I don't know what to think of interest rates. I did make a video last week that the Fed, it was called the Fed and Trump are killing the real estate market. Reason being, the Fed lowered interest rates by 25 basis points again. Trump mania was going on Wednesday. So Wednesday you had Trump mania. The stock market went like this. Thursday, the Fed dropped interest rates by 25 basis points. Stock market went like this, and mortgage rates went like this as well. So mortgage rates were 7.13%. Today, just before this meeting, they were at 6.9%. And to be precise, I'll pull up the app real quick. Interest rates are at 6.92% for a 30-year. I don't know if you can see that, but anyway, I'll dive into the questions here. First one is from Alexis. Building codes are local, not sure federal government much local municipality change UDO of higher destination. Yes, correct, Alexis. So Alexis is talking about that building is done, or building permits are done from a local municipality. Oof, you're giving me some strong, difficult words here on Monday. But it's the county that decides that. But the county can be stimulated by the overall government to enhance building, right? Like the government, there will be you can think about there can be tax breaks, there can be other incentives for local municipalities to have buildings there. There can be for builders, there can be incentives if you build there. Again, I talked about the tax break that Trump is wanting to do for if you have affordable housing, if you build for affordable housing, or if you are a landlord for affordable housing. He wants to incentivize that. So come off of mute, Alexis, if this is not an answer to your question, but that's how I see it. Perfect. Thank you. Portia, I'm not sure I completely agree on your crypto take, but it's a real. I am mostly for political drama. So my statement on crypto was, which you don't have to agree on, and I appreciate you saying that, Portia. My take, and so far I've been proven wrong, right? Like I saw it last week, it was at 88 something, and now it looks like it's about to go above 88, right? So I might be wrong, but I truly think that Trump never liked crypto, so I'm very curious to see what he thinks or what he's going to do this time. But you have something to share on this, Portia?
Yeah, no, I was just joking about the whole political drama thing. We are here in a respectful environment. But when it comes to crypto, Trump is surrounded by a lot of people who really are for crypto. And plus, when you have a Trump presidency, I think they're going to be anti-regulation. And that's one of the things that folks who are working in the industry really care about. They don't want the industry to be A, overregulated. It's really bad for innovation. And B, if they are regulated, they want just clearer rules. I'm not so passionate about this topic, just chiming in.
Yeah. There are a few financial advisors that argue that Trump is against crypto and might be using the crypto to pay the national debt down. The national debt is the major issue for the government these days. There are two major issues. Why I am very curious to see how Trump is going to handle interest rates. The first one is there is. I believe don't quote me on the number, but there is $1.9 trillion due in the commercial real estate. That is a true national, that can be a disaster for banks, right? The commercial real estate loans being due. That's one. Two, today we spend $1 trillion on our interest rate, paying our loan down per year. This is the interest rate. That is more than we are spending on our army. And how are we paying our national debt down? We're printing more money. We're just printing more money to pay our debt. So the dollar becomes lower and lower and lower, which is going to increase inflation. So because of those two factors, that Trump needs to have a solution for the commercial real estate, and he needs to have a solution for the national debt. I'm very curious to see how he's going to handle that with interest rates, right? Like, and is he going to use crypto to pay that down? Because he's not a crypto guy. Again, I'm not voting for any political party or trying to support anybody. I don't trust Trump when it comes to crypto, so I sold all my crypto. I didn't have much, so don't think that I'm now like, whew, I got a lot of money out of it. No, I didn't have. I had a few $1,000s. So, and if it went to zero, I would be fine. But that is the overall angle that I took. Is like national debt, interest rates, and how is he going to take them? Then next one, Kathleen, what types of housing hard assets do you prefer? Anything hard assets. It can be land, can be any type of building. When there is inflation, the worst thing you can do is have money in your bank account. That's of course you need to have money set aside. Bear with me, don't empty your bank account today and say, Eric said the worst thing to do is dollars in my account. Of course, you need to have money aside for a living, but during an inflationary period, it's best. Look what happened to everybody during COVID that had a house, right? All our values went up. We were all so happy because there was an inflation. I'm not saying that we're going to experience the same inflation as during COVID, but there will be inflation, and any type of assets you can put your hands on. It's a new build, it's a land, it's a rental, it's a flip. I told all my realtors, slow down on the flips. We're not selling anything. We'll put them on the market. We'll put them for a strong price. But if we don't get it, what I'm looking for, I will not negotiate my price down. Right? I truly think that come February, March of next year, we're going into spring. We're going to get a strong real estate market. Again, the only thing I'm not so certain about is the interest rates. I have advised friends to hold off that have a new build to hold off getting a new securing an interest rate. At this point, I'm not sure if that was the best advice, because if you have inflation, again, I'm not so sure about the interest rate. What do you think inflation will be due to tariffs? Tariffs is one. Tariffs is definitely one. But giving people more money, or giving people the feeling that they have more money in their wallet, because again, you're giving them a tax break, an income tax break, will stimulate people to start spending more. And when you spend more, you're going to have inflation. So tariffs is mentioned throughout over the 5 hours of studies that I did on this topic. Tariffs is mentioned as one of the major topics that will drive prices higher. Like we haven't, manufacturing numbers have gone down under Trump last time and have gone majorly down under Biden administration. So it is not like, oh, we just put tariffs in place and we have another factory that can take it over. So there will be some higher prices for some of the goods that we're going to ship.
So when you say a hard asset, Eric, you mean you maybe if your house is not selling for the price you wanted, maybe have it as a rental for some time till the market is offering.
Yeah, or on the flip that you and I are doing, there's so much margin. I'm in no rush on selling them. First and foremost, if I don't really think that if you sell anything if you don't put anything in under contract in November, first week of December, I don't think that there will be more buyers out there because of Christmas. So it's already a very difficult time to sell houses now anyway. And again, if you have the opportunity to hold your loan and sell that property next year, I think you will be better off than selling it, trying to sell it now.
Okay. Yeah.
Lisa Coleman says interest rates mainly out of his control. Yes, Powell said, can you be fired? Powell said had a one-word answer, that was no. John Powell said he will not be directed by the government, and the Fed Reserve will remain independent as established. Correct. Lisa Coleman says, I agree, the market is going to be very strong in the spring. So again, guys, the market is the real estate market. Everybody that I have listened to, everybody that thinks that have an opinion about it or thinks that they know something about it, believes that we are going into a strong real estate season. I'm not sure how long it's going to last, but Trump is a real estate guy. Last time he was very good for the real estate, partially because of COVID, but also his rates were low. So I'm just curious to see what his tax breaks are going to do, what his what he's going to do from a building perspective, and making the permit process, although that Alexis points out really clearly and very on par, that the permanent process is from a local perspective, but he wants to change the entire permanent process. He wants to have more houses. He wants to stimulate more houses. Nobody talked about how he's going to do that. So let's see. Mariana says, if the holidays are a difficult time to sell a house, does that mean it's good time to get a good deal on your house? On a house, sorry. Does that mean it's a good time to get? Yes, and yes. I mean, sometimes these meetings feels like I'm bragging about the deals that I did. There are bad deals. I have done bad deals, but everybody, and you saw my video on social media. I just purchased land for $265,000 in downtown Raleigh. I'm building a duplex on it. The profit on that, conservatively, is $600,000. The buyer that had it on the contract for $275,000 couldn't perform, right? So now is the time, and that is the second deal that I did in downtown Raleigh in just a few months, in the last few months. Last meeting, I showed you the first plot that I have on the contract that has a bigger profit than $600,000. So now is the time to make offers. Now is the time to get properties on the contract. And on November the 21st in the Raleigh meeting that Tria has, I will be. I have a presentation how I search for properties, how I look for potential desperate buyers. On it's a Tria meeting in Raleigh, hosted by David, who's on this call, and I have been using that technique since August. I thought that August and September were the low points in the market, and during my meeting in October, during my meeting in October or September, I told everybody that the interest rates would drop. But during the meeting, I also said that I was a little afraid that the rates would drop too late in the season. And during that meeting, I said, I don't think that the real estate is going to increase because rates are dropping too low. What I did not anticipate is that the rate would drop, and then a job report came out and rates did the exact opposite of the Fed. Rates went skyrocketing high, over 7%, and luckily recently they're coming down. So yes, Maya, now is a very good time to buy a house. If anybody wants to get started, please do so before Trump gets in office. That's what I think that's really what I'm going to say. Powell's term ends in 2026. Thank you, Tori. Powell will be there for a little while. I do like what they have changed with the Fed is the openness of the Fed, right? Powell has been one of those, and his predecessor as well. They really opened up and made it more accessible, the data from the Fed. I like that personally. Angelina, Is that you building on Davis? No, I'm not on Davis. I am on Bickett and I am on Cotton Street in downtown Raleigh, and I will be on Alston Street. I'm not yet on Davis, but if you have anything available on Davis, you know where to find me. Krishna says, so when you say, let's see here, when you say the market will be strong in the spring, does that mean, what does it mean exactly? What should we be preparing for? East Daily. What does it mean? I think it means more buyers. Right now it is a buyer's market. Buyers decide the price. Buyers decide the DD. Buyers decide is the seller going to pay for the buyer's agent or not. Buyers have a lot of control right now. It's not the sellers that are in control, and that was very different during COVID. Right, during COVID, you put your property on the market within 48, 72 hours. You had multiple offers on the table, and you got over asking offers a lot. That's what happened during COVID, right? That is called a seller's market. Sellers are in the driver's seat. They get to decide. So I do think we're going to shift more towards a seller's market where the seller is a little bit more in control. We're going to get more offers on our property. We saw in September that the pending home sale numbers dropped at the same level as 2012, which was very, very low. We just came up of 2008. So I do think it's becoming more and more a seller's market again next year, where there is more demand for housing. Was that an answer, Krishna? Perfect. If I don't hear anything, I'll agree. Angelina, East Davie Street. No, it's not me on East Davie Street. I wish it was. But again, if you see anything downtown Raleigh that I need to get, let me know. Sorry, that was a previous question. Correction. Perfect. Okay. Those were all the questions that I have tonight. Normally, this meeting goes long. Oh, there's Tori again. So put in your questions. I'll be here as long as needed. Normally, we spend 1.5 hours on this call. Go in and out as much as you need, and if you need to go elsewhere. The next question is, Eric, how are you getting around restrictive covenants, especially when buying in downtown Raleigh? I was trying to create a duplex myself, and the RS don't allow for it. Tori, within Raleigh, you have the transit district. That means close to downtown Raleigh. If your property is 50 feet, has a width of 50 feet, you can put a townhouse duplex on it. You cannot go higher than 32 or 34 feet, depending on the street. Often, how we get around the height and the density is creating the garden or the yard as a top roof. The top roof will not be considered the height of the property. So if you put a top patio on top of your property, that is not considered in the height of the property. What I did is, if you go online and you go to 301 Bickett Street, we have that now on the contract since September. We're buying the property for $945,000, and since that is a new development, kind of on the edge of what we can do. We have negotiated with the seller a closing date that is after the review with the city. So the city on the 21st of November, the city is going to review our plans. They're going to either say yes or no. If they say no, I can walk away from the deal, say, sorry, I cannot build what I intended to build, or I can renegotiate the deal. But if the city said yes, which they most likely will do, if the city says yes, then we follow through with the contract and we'll close on that contract before December. So I'm not sure, Tori, if that was an answer on your on the question. There's a lot of questions about 301 Bickett, or there's a few questions about 301 Bickett Street. What will I build there? Let me share my screen real quick. No, that is not the right. 301. Okay. Can everybody, can you guys see my screen? I see shaking heads. So this is what we will be building there, and it is mind blowing to me. If you drive by the property, I would think maybe one house could fit on it. But this is what we will be building on that lot. This is the entire lot on the end of Bickett Street. We will be building 3 houses with a footprint of 40 by 25. And the second one has a footprint of 20 by 26. The garages will be in the ground, will be sticking out 30%. And then, as you can see here, here's the garages. And then we will be building up and all the outdoor space for the people. Thank you, Angelina. Thank you so much for the support. All the outdoor space will be on the top patio. But as you can see, this is the entire lot. I have no idea how we're going to get 3 properties in there, but clearly the surveyor and this design shows that we can do it. So I'm not sure how we're going to do it. And the other property that I just mentioned downtown, where are we building a duplex townhome? I might do a show and tell there one day where I just take. We will be taking this property down, and we will be building a duplex townhouse there. All right, enough of that. Thank you. Any other questions people might have on what I just presented? Any other questions about Trump, about the election, about real estate, anything? And you can come off of mute, you can type it in, or you can come off mute. Marianne is asking me a question. Eric, I was told you'll be doing a Rocky Mountain subgroup meeting in November, where you'll choose a property, walk through the repair costs, and do everything hands-on meeting. Is that meeting on the 18th? Yes, that is. On November 18th in the Rocky Mountain subgroup, I will be showing you how I look at deals. I will be drafting an email to a lender. I basically will show you how I evaluate a property and the language I have with my lenders. The language with your lenders is very simple. They don't care. I'm so sorry, but I'm going to tell you right now, and I hate to burst your bubble. They don't care about you. They care about what's in it for them. They care about their vision. So when I present a deal, I focus on what a lender is going to make, what a lender might ask, how is their property secured, how is their money secured. And I'll be on November 18th during the Rocky Mountain meeting. I'll be showing you all of it. I'll be sharing that with you. You can have my emails, you can have whatever it is, but I'll be doing a deal with the entire group there together and trying to help you guys out, lend your deal. Portia, do you have any more details on what policies the Trump administration has in mind in regards to affordable housing? Invest in mobile homes, and this is pertinent to my asset class. Oh, mobile homes. Woo. I'll take my hat off for you. Mobile homes are, from a lending perspective, I think very, very difficult, and mobile homes can be tricky. So I'll take my hat off for you, Portia, out of respect. No, other than Trump, again, I believe it was a rally in New York. Trump said that he wants to have a affordable home sitting next to your house. Those were his words. He wanted to have more affordable housing in America. And yeah, thank you, Alexis, for laughing, because why is it appealing for a president to say, I want affordable housing next to your house? We might not even want it. So how is that appealing? I don't understand it. Anyway, those were his words. What his policies are, there is going to, again, the only thing that I was able to find on that is that there's going to be tax benefits for builders. And it's funny. It's really, really funny, because if you know a little bit about Trump's history, his father was a big developer in New York, and his father had a hard time in New York when New York had the Affordable Housing Act. That was not very beneficial for homeowners back in those days. And Trump's father was a large land developer and owner back in the day. So why he doesn't want to, why he's doing it now, I don't know. I know, of course, because there is a housing crisis. By tackling a housing crisis by higher inflation and high interest rates, I don't think that is the right strategy to go. So I'm just happy I'm not in the president's seats tackling that problem. Anyway, do you have more details? No. So those were the questions. Does anybody have anything else for me?
Do you mind uninformed comments? I'll keep it short.
Yeah.
So it's interesting what you mentioned about affordable housing, because during the last Trump term, he did have opportunity zones.
Mm-hmm.
And I'm wondering if he is going to connect affordable housing with the opportunity zones he created, I think, like back in 2017.
Very good point. Very good point. Something again that I did not find in my studies, other than tax benefits for developers and for landlords that have affordable housing units.
But I think the opportunity zones are based on the amount of I did not study up for this at all. The amount of income or amount of wealth within an area. So I think if you're a business and you are creating a business in an opportunity zone, you get a bunch of tax breaks. I think that might be true for those who are also building property and investing in those areas. So, I mean, that's a natural connection. I'm wondering if he's going to go with that.
He might be doing that. Now, I do know as an investor that has a lot of properties that Rocky Mount, there are parts of Rocky Mount that are considered an opportunity zone. There's actually tax credits that you can have from investing in Rocky Mount. Now, we can argue if that has really helped Rocky Mount. Of course, there might be some more traffic because of that in Rocky Mount. But to say that Rocky Mount now is really prospering and really in an upwards trend because of that, I don't think so. I think Rocky Mount has seen more growth during COVID when Raleigh and Durham got way too expensive, right? You saw everybody that normally bought in Raleigh and Durham. You kind of saw them looking elsewhere in the cheaper regions. That is a very good point, Portia, but I have no idea how he's going to do that, other than, like I said, what I was able to find about tax credits and that you will be having a affordable house next to your house. So yeah. Any other good questions? Chime in. Doesn't have to be political. Can be about your portfolio. Doesn't have to be about the elections. I just wanted to share this with you. So anything else you guys said?
I have a question, Eric.
Okay.
I think one of the videos on your social media, you have been kind of balancing this, probably preferring nowadays more new construction. So are new constructions are profitable? When you compare to fix and flip, how do you find new construction deals, right?
Yeah, that's what I'm going to experience, right? How do you find new construction deals?
But first of all, are they profitable? Maybe.
Yeah, sure, absolutely. Yeah, they are. You will not go over 60%. Your cost cannot go over 60% of the profit.
Okay.
So let's go back. We'll run the numbers let's run the numbers together on this deal. So this is the deal that I just bought, and I'm going to pull up a calculator. Let me see if I can get a calculator to do this.
What was the reason for the screen you're sharing? At least in my case, it's coming out small as a small window. still
Oh,
coming
so-
in.
Well, so I'll take the property off. You've seen the property, but let's do the numbers.
Okay.
So that particular property, I bought that for $65,000. I have gotten a quote. This is including the demo, including the permits. Basically, this is everything from the builder to build two 1,900 square foot duplexes for $520,000. So my entire cost to build this project is $285,000.
Okay.
A 1,900 square foot duplex will be sold on the lower end for $825,000 or $1,650,000 is the total sales price. You know me, I always take for realtor cost and for attorney cost, I always take 8%.
Right.
Now on a deal this big, you might pay 5%, but I want to aim high. I have attorney cost. There is other costs that I might have. I might have architect costs. There might be a few more things that I don't anticipate. So I want to go for 8%. So my realtor costs are $132,000. The previous number that we had was $785,000, right? That was the total cost to build. So right now I am at $317,000. Right. It takes $785,000 to. Yeah, Alexis, I'm going there. And there are smart people on this call. So what we're going to do is I gave, and here I'm going to really show you guys under the hood. I'm taking you back into the kitchen. So to come up with this deal, for the $265,000, I am giving my lenders a 15% return. All right, 15%. So we were at $917,000. Let's round this number up to $40,000. So 917 plus $40,000. We are now at $957,000. All right. So $520,000. I'm getting that for 10%, $52,000. So $957,000 plus $52,000 is I will be in this deal for $1,009,000. Oh, sorry, and $9,000. All in cost. I have my finances. I have my realtor cost. I have all my permitting. I have everything. Right? Please raise your hand if I forget anything. Perfect. So we're going to divide that by what my sales price was going to be. And I'm at 61.1% of the total cost.
Okay.
Or I am, oh, no, I need to do that differently. Oh, no. Or that's my net profit.
Okay.
And you heard me say earlier, in the most negative way, thank you. Thank you. Antonina. In the most negative way, I have a profit of $600,000. Say that I hold it longer. I calculated everything on a year. My builder says it will take half a year to build a product. I've seen his product. I've walked his product. I looked at the numbers with him. He showed me everything, right? So to your answer, is building more profitable than flipping? Yes, 100%. Do you take on more risk? 100%. But it is worth, like, this is going to take me, and PK, you know this because you and I are doing a flip that is going longer than we anticipated for several reasons. But this takes as long as a flip, and my profit, maybe I'm doing flipping wrong, but I have never had a flip that gave me a profit of $600,000, right? So yes, it is more profitable. You do need to make sure. Like for me, I'm getting building. So I'm building that first property that I showed you on Bickett Street. My building costs are over $200,000 per square feet. But I'm also selling it for $900 per square feet. Here in Cotton Place, my building costs are $150 per square feet, but I'm selling at around $425 per square feet. So for me, this does not work in cities like Goldsboro, or it does not work for me in Winston-Salem yet. So for me, this strategy only works in areas where I'm able to get $350 per square feet or more, right? So this worked in Durham for me. Anyway, so what was your other question? So you said, is it more profitable? What was the other one?
I forgot that as well. I mean, as long as, just to follow up on that, as long as you keep the all-in cost about 60%, then it's a safer bet.
Your profit needs to be around 40%. Yes.
Yeah.
Oh, how do you find the deals, guys? And for those that have been following me for a long time, you know all of this. I basically am sitting here because of TRIA. It's all because of TRIA. TRIA was the first meeting I went to when I had a property under contract, basically I built my entire network based on TRIA. This is how powerful TRIA is, and this is why I want to do that meeting on November 18th next week. I said in May to members of TRIA, throughout my networking, I said to members of TRIA, I said, I am a builder. I'm going to build. I need your deals. And then Bickett came in August. Cotton Place came in October. Me just saying, I'm a builder. I want to start building. The reason I mentioned that is now we're going to start diving really deep. How I work with my business goals is I have annual goals. Annual goals. My annual goals are broken down into, I don't have them here yet, are broken down into monthly goals. My monthly goals are broken down into weekly goals. My weekly goals are broken down into daily goals. My daily goals are broken down into a daily schedule that I have to follow. The reason I'm so anal about this, and the reason I wanted to show you how I do goals, is if you don't know your goals, then people in TRIA don't know your goals. And if you know your goals and you be very vocal about your goals, then you will all of a sudden you see that your goals are achievable. Like people might approach or might see me as oh, there's Eric. He's screaming as loud as he can that he is a builder and he wants land and stuff like that. No, okay, I'm sorry that you see it that way. For me, I'm very loud about my goals for two particular reasons. A, you and I might be doing a deal together, or you might be able to help me. But B, who do you think is going to hold me more accountable than you guys? I have an accountability partner that says, hey, Eric, you said you were going to be a builder. Where are you on your building, right? So when it comes to all of these goals, if I'm loud about my goals and everybody knows my goals, I have accountability partners that can help me. So it works for me. I don't know how you do your goals. We can do a whole session about goals, but that is how I break down my goals. That's how I do my goals. And it is because of TRIA that A, I got started in real estate, and B, that I now do.
No, that's fantastic. That's helpful. Like yeah.
Alexa says, "Are you your own GC?" No, I am not working with a GC that I know. I am just the financial guy on this deal. That means the GC will build. I'll get the money. Then I go to the bank, try to get the money back, and I'll just keep floating money through these deals. So no, I'm not a GC. Neither do I inspire to be one. A few good friends of mine are GCs, and I know the course. And I was never much of a study person. I never liked sitting in behind the desk and study. So I don't think that becoming a GC is much for me. So, any other questions you guys might have? Awesome. Well, if this was it for people, then this will be the first meeting since we're doing this that we keep it within the hour, which is great. Thumbs up if this was helpful, or if you needed a little bit more information. I see a thumbs up there. Thumbs up. Absolutely. Awesome. Thank you guys for that. Timothy, I'll get to you. I got another question here from Mayan. Do you ever mentor people, newbies, through your projects? Thank you guys for the thumbs up. Yes, I do. I don't do an official member or a mentorship, but last week, Roger, a member from Tria, reached out to me and says, Eric, I'm about to put my flip on the market. Do you mind walking through here? So I did that. If you don't have my contact details, please get them from me. I'll answer calls, I'll answer emails, and if you have a flip that you are looking to do together, maybe we can do a flip together, or maybe we can do a new build together. Whatever you have in mind, we can we do that. I don't have a mentorship program. I don't believe in paying somebody for a membership program. So, I'm not sure if that was an answer to your question, but I love to help. I love to just give back to the community. So anything you need, let me know. Timothy, you raise your hand.
Actually, no, I was trying to do the thumb thing, but there's 4 but I will say great information. Thank you. Glad I was able to join.
Awesome.
And I'm sure we'll chat.
I appreciate you guys. For those that are not yet registered yet, we have our main meeting for TRIA this Thursday. If you are a TRIA member, please make sure to be there. You will be voting on the next members for the board. So if you want certain people not to be on the board anymore, or you want certain people to be on the board, I highly recommend you go there. The speaker is amazing. The description, which I worked on as well, it's not doing justice to the speaker. She is in the Pentagon, in the Army, high ranked, and she will be very humble about it, so she won't tell you her rank. But she is one of the highest person in the Army looking at the national budget for our national reserves. And she has an incredible story to tell about how you can work. And you guys know, if you work in the Pentagon or around the Pentagon, your cell phone doesn't exist. Like, you don't have service there. So how, in a world like that, are you able to still answer emails or create a business while your phone is restricted for a certain amount of hours during the day, right? Or at least her phone is in the section of the Pentagon that she is in. That's how high ranked she is. If you can't, I highly recommend you be there on Thursday. You get a lot of energy from that lady, but you also get a lot of information from her on how to manage your time. We all have other things than real estate. We all want to grow our real estate. Definitely now that we have learned that there's potentially an inflation going. So how are you balancing your personal life with your professional life?
Okay.
No. The main meetings are normally not recorded, Marian. I'm sorry, not yet. We'll try to work on that. Yeah. I know. I appreciate you guys joining here on Veterans Day. Thank you all to all our service members. Thank you guys so much for joining. I hope it was fruitful, worth your time, and I'll see you guys soon. And if not, I'll see you next month when I do this again.
Thank you, Eric.
Thank you very much.
Thank you. Appreciate you all.
Thanks, Eric.
Thank you. Bye-bye.